Bitcoin dropped below $100,000 earlier this week and has been consolidating in a tight range. Stock market has also cooled off as well, and across the board, markets remain gripped by fear. In today's video, I want to break down the key levels I'm watching next here for Bitcoin, as well as a few others, and what could shift the sentiment here moving forward. Welcome back to DataDash. My name is Paul Sampson. We began this week with an over $10,000 drop to the downside, bringing us very close to that key region that I've been looking for, that 97,800, right, which is a high time frame average from the beginning of this year that was very likely to be met in the second half of this year. Now, since then, it was June when we put that in, and we've seen all-time highs come out of this. As around this window of time is when we had that average generate, we've seen some new highs twice since then, and each and every time we had to be aware that it was likely we could come back to see this region in the following session, which meant the second half of this year, right? So we are on our way towards that region. We have front run it so far. And my question at the beginning of this week, again, when we were trading around this region as we started to decline a bit, was were we going to see a push up again towards that 111, 112, which these are some new areas that generated for the month of November as well as this week to be aware of here, or if we were to just going to slowly move on down. And to be honest, I did anticipate us to make our way down to this a little bit later, right? So where I was looking for maybe a few more weeks of consolidation. So originally I did foresee us maybe more so doing this type of a move here, but nonetheless, still very aware that 97,800 was a very likely area for Bitcoin to retrace to a simple mean reversion at the end of the day. Now, the key here is that we have front ran it, all right? And it's interesting to me because, I mean, we're only a few $1,000s away here, so it's only a few percentages away as well. Okay, you're talking 3.5%, 4%, give or take. Could very well just come down and tag it now. What I want to be aware of here, though, folks, is that if we do not, so this is a clear front run. You could consider it tapped if you'd like. For me, I'd like to keep my eye on it because we've done this exact move before. And it was actually right here at the beginning of this year when we started off in January. We had a very similar situation. We had a new high time frame average that was untapped at the time down here at 86,000. All right, we were making our way towards it and we front ran it just by a few percent. Let's just see, just for fun, how far we front ran that by. This is only by 2.5% here, so very close to it. From there, we went on to create a bearish shark setup where we have effectively come down and you take the lows right here and you take the highs up here, and very likely to retrace to certain areas, the shark targets, which I've actually left this noted as that, even though I've kept it on the chart here. And it's just an interesting idea here because we have seen that before where we came down, front ran that big high time frame average, ended up actually pushing up again, and then weeks later, if not months, this was January, effectively we came down in so 1 month later, so a few weeks go by before we actually come down, and just overall range that occurred, right? That is something that we could very well see here as well. Again, this is a pretty decent front run. This is not just less than 2%, this is almost 4%. But overall, we could very well start to put in some low market structure, some new market structure here, meaning like just a simple gold pocket retrace, right, to where the price action comes down, finds support, and then keeps going, puts in a higher low and go. So something to be aware of there. For me, still nothing materializes in this current price action until we're above 104,700, which is actually our current high from yesterday. So you can see we rejected off that just a little bit. And the reason being is that that's our current range that we have to work off of, okay? So where we are now, we're kind of in limbo, I'll be honest, right? So it's not something that, you really can easily say can go either way here, although we're trading within tight areas, very low minimal areas here. I will say this is a little bit of a line in the sand for downside to me is 97,800, and then we got a line in the sand for upside, which is 104.7. So flip that 104.7. We have some sizable moves here for Bitcoin, which is going to equate to the altcoin market doing well. Of course, if Bitcoin rises, the majority of the market at least stays still and doesn't crash on us for a few days. But that's those are the two levels I'll say that are still pretty much our lines in the sand, okay? And it's a pretty close little gap here. It's only about a 7% window from each of them. From where we are right now at the current price is about 4% below us and about 3% above us. So one of these are going to give more than likely. and we'll see how things go. But yeah, front running this right now. And if we were to flip this 104, really sets us up for a similar situation to where we could see more upside here for a few weeks and then come down and effectively meet this in a few more weeks from now. So maybe next month, maybe even in January, right? So just something to be aware of. I'll be updating that as we go. But for now, just know that these two are the key levels, in my opinion. So we'll see how we react at either of them if we get through them. Also, at the beginning of the week, we discussed how important this yearly open is for Ethereum. So sitting at about 3,336, roughly where we are trading at off and on. This is the weekly time frame. I'd like to see the end of this week close above that area. All right, so closing our weekly candle down below is not a great sign. Generally, that means we're losing support. Closing down below it, you come up and you back test and you continue lower, right? So our line in the sand here for ETH for any more downside is truly this region. We have our gold pocket obviously down below to be aware of, down at $2,600, and then 2,200 is even something to be aware of here, as we have a major point of control down there. So we don't want to see Ethereum losing this yearly open. It just really does open up some more downside here. So end of the week, I'll be paying attention for this, updating in the Discord especially as we come to close, that we'll be looking for how we react around this region, okay? At the beginning of this week, I also took a look at the S&P 500. In the Discord here, I pointed out that we were likely to come down and see a cool off to about $6,700 here, right? So may get a cool down to $6,700 area on the S&P 500, which were some key regions here. Again, folks, if you would like to have access to this Discord where I post all my analysis, daily setups, educational content, and more, join us over at DataDashPro.com. You also have access to Nicholas Merton's monthly Dash report as well, all included in one monthly membership. So we have since then seen the S&P come down. We had an untapped monthly average here, and then we also have a volume target here down about 67.13. So this does put us into a previous range, is the only thing to be aware of. So a key support here just locally is going to be that 67.13. What we don't want to see is us living in here. And again, if you do or you don't, if you're looking for some fresh entries, of course you do. If you're in fear here and you don't want the market to go lower, obviously it's not the most ideal, but we're just going to interpret the information as it is. And while we are within this range, you have to be aware that we could very well rotate this range, all right? And taking it level by level to see how that's going to start unfolding. It just really comes down to now, since we are in this region, likely to be coming down to our volume target at 67.13. If you start living below that, that's when we could look for that the whole rotation there. Otherwise, could get a little support bounce off here. We'll look to get out of the range, and from there we'll see how we shape up. Nasdaq is also getting a little cool down here, right? So down about 4% from the most recent high, just coming down. Still really nothing broken here. You know, normal cool downs and pullbacks as it goes at the moment, and a natural cool down occurring on the Dow Jones as well. About 2.5% coming back to likely back test this 618 expansion area here. So we'll look to see if we hold this region to see if we get another support bounce to the upside. Otherwise, line in the sand for any more materialized downside at this point would be from that region. So a big area to look to. If we lose it, look for more down. If we're looking to hold this to get a bounce back up to the upside. We've discussed NVIDIA a few times, coming up to a really, really major target area. Now, again, this is actually within price discovery mode, which is always fun because you can still, when you have no information to go off of, you can utilize the pre-existing information to extract new key regions that are basically invisible to the naked eye, but you can very well see how the price action has respected these two major levels. We came up and originally hit this first one right here at 195, small pullback, and then the main one up here at 210 has so far been really holding this down. We've got about a 10% cool down from that region. So this is a big piece of why I point them out, is that when we're coming up to these areas, there are major resistances, and if we're going to see cool downs and some speed bumps along the way, even if it's going to come from these major areas. So so far about a 10% pullback on NVIDIA. Here's one of the big kickers. I mentioned it again. This is probably not something that I'd be chasing at this level. Now, can it continue higher? There's always the chance of that, of course. For me, I'm a buyer at some better entry areas if we get them. And I formulate that off of my strategy, right? So similar to how Bitcoin is coming back to that high time frame average at 97,000 that we were just talking on, NVIDIA has a couple of really big things all stacked up here down at 135. Now this would be a sizable correction of over 30%. if we got it. And that's, to me, what I look for. I look for the big red days, right? The big blood in the street type of environments when people just don't know how to make something out of it, or everybody thinks that the market's just going to completely die from there. That would be a very technical thing to see here, folks. We could even see it really quickly, and on the back of us just tagging $210, and then you get a tweet or something out of nowhere and that drops the price, right? And everybody just scatters around that. Does that have to happen? By no means it does. But that's where I'd be a buyer at personally at the moment, right? If I had to get into NVIDIA, if I'm looking for a fresh entry, 135 region is that for me. And if we don't get it, then I'm looking for other opportunities elsewhere. That's just how I manage my risk. I'm never going to chase a pump. I'm never buying all-time highs. Always going to look for the calculated retracement, and that to me would be $135 for NVIDIA. And then we've got gold here, still holding around that 39.76. All right, so we're on the daily time frame here. Again, was anticipating a decent little pullback from around this region up to 4,400. You've pretty much got 380. And what we look for here is that usually you will look to get a deeper pullback, of course, right? You want the best type of, DCA areas or entries, or just looking for those really key regions that the price will pull back to. Gold pocket is one of them that many will look to, and it's very technical for many reasons. And generally, that's an area where you will see it come down. The only reason I highlight the 382 so much is that, especially in a very strong move to the upside, we only get a shallow retrace to the 382. We might consolidate there for a bit, but then ultimately you seek a continuation from that region. So to me, as long as we're holding above here, I actually anticipate gold to still actually move up a little bit more, even if we just come back, challenge these highs again, okay? So would I come into gold with like brand new buying, at this point? To me, not necessarily the best place. Again, even if we are going to continue up, this is something that's up over 100% in the last year and a half here so far. So after basically doing nothing for a long time, now can we see a complete just melt up to the upside? Yeah, it's always possible, but again, I'm just never chasing a huge pump. If I'm gonna get involved at this point, I'm probably scaling in with lower amounts of capital just to have some skin in the game for if we do just continue up from here, and I wanted to be in this move and have some gold at that point. But personally, I just, again, something I just can't personally get behind with my risk management to come in heavy, at least at 3,900. But when looking at this, when talking to the people that are already in gold from lower, that's a lot of times how we have to look at some of this information. I'm not always talking to somebody in the sense of where I'd buy, would I buy today. Sometimes it's just discussing with the person who bought years ago, knowing that this is a natural pullback and we are at a key support here that could very well offer up another leg up to the upside. And then on the flip, we are in line in the sand territory, right? Where if you do lose that, then hey, the gold pocket is definitely on deck. But I would not overlook this 39.76 to hold and see if we can get that next leg up out of it. As always, folks, make sure to stay patient. Let the charts guide your decisions, not emotions. If you'd like full access again to my daily analysis, educational material, and exclusive setups, head on over to DataDashPro.com and become a member today. You'll also get access to Nicholas Merton's monthly Dash report. I'll be sure to see you in the next video. Till the next time, everybody. Cheers.